got some great news coming out of Atlanta culture. So, a black-owned venture capital firm raises $75 million
Mm.
in a new fund, backed by major brands like Apple and Goldman Sachs.
This is amazing because
Yeah.
$75 million is a lot of money. And so,
Yes.
what do they plan to do with this $75 million? Are they going to raise more, or are they
So,
going to start investing into like small
so
businesses?
Collab Capital is the firm that raised it.
Mm-hmm.
So they closed a $75 million fund, which was focused on early stage startups addressing fundamental needs across work, healthcare, and community infrastructure. So those are some of the areas and business models and things that they're looking at investing in.
Okay.
So this says the fund will
Hmm.
will enable Collab Capital to invest $1 to $2 million in approximately 30 companies
Okay.
over a 4 to 5 year period, and that brings the firm's assets under management to $125 million. So, I know that sounds like a lot of money, but that's extremely low when it comes to venture capital. I mean, it's funds with 100 billion.
To give, but not to give to one company though.
No,
To give to across a few.
yeah.
Okay.
So
Okay.
this is a great new. This is great news. With it being black owned and
Yeah.
with they're getting started, but like this is literally a drop in the bucket. For what venture capital represents in terms of capital and assets
Mm.
under management. So let me give you an example. So assets under management, a lot of times you in venture capital or private equity or whatever, you have your assets under management. You have a management fee.
Okay.
So let's say you have like a 2% management fee and then a 20% profit.
Yes.
So what that means is you get 2% of the management fee that you have assets under management. So in this case, they have $100 million. They have $125 million. So let's just do some real quick math. So that means $100 million. 2% of that is $2 million. So that means they have assets under management $2.5 million.
Okay.
So I mean,
2 points.
2.5 million is what is their like management fee,
Okay.
right?
So that's how much they're making.
That's how much they generate to run their firm, to do the research, to pay their
Okay.
employees, do things like that. $2.5 million
Okay.
a year, pay their salaries. So if they make an investment and the investment does really well, the firm also gets 20% of the profits.
Nice.
So that's how they are structured. With assets under management. But I'm telling you, it's firms with $170 billion, $200 billion,
Mm.
$50 billion, $10 billion, like Sequoia Capital and all these places. So venture capital
Mm.
is big business, and this be my problem though. My problem be $1 million. It's not a lot of money.
Wait, so
when you're accepting venture capital, like not in today's era.
$1 million because you gotta give 20% back?
No. $1 million is going to the business.
No, that's what I'm saying.
And the business is using that to operate.
Right.
So I'm saying $1 million is not enough to build because a lot in venture capital you want to become a unicorn. A unicorn is a company worth $1 billion.
Okay.
So to become a unicorn, you got to raise so much more, and to generate revenue to justify your valuation at billions of dollars, you got to raise so much more. So my problem is it's so small. They taking $1 to $2 million
And
for
giving
over
them
30
to 30 companies.
Really, they should. If you got 125 million in VC, they probably should be investing in like 6 or 7 companies, not 30. And they should be giving like $5 to $10 million checks.
Got it.
Instead of $1 to $2 million. That's just what I see with a lot of black-owned brands or black people that get investments. They don't raise enough, and a lot of times you take that venture capital money, and that is why they force you to sell your company. Because when they take your venture capital, they taking board seats, they taking control, and they run your cap table. Because a lot of times $1 million be the most that you get as a black founder.
Yeah.
So
well,
that's my only gripe.
Well, coming into like venture capital, I have my own experiences with venture capital. I actually worked for a private equity firm,
Okay.
which isn't venture capital, but they had considered, diving into that.
So you worked for the firm, or you worked for a company that receives?
I
Like,
I
like, how does-
actually worked for the firm. Like, those are the people who signed my checks. Was
Okay.
the private equity firm, and I operated for the nonprofit arm of the company.
Okay.
Yes.
Okay.
So they paid me. I operated that sector of the business.
Okay.
But it was interesting to see, because I was kind of on the inside of it. Have you ever considered for Black Millionaires? I mean, Black Millionaires has been operating independently for like the last 5 years. Would it be time, or have you ever considered getting a investment?
So I've talked to a couple people who were interested in acquiring my business, like acquiring the whole thing.
Wow.
We didn't meet eye to eye on a number that would allow me to walk away, so I just operate independently. But also, I think if I was to raise, I would have to raise and get a lot more money. Like, I would raise a lot. But so here's the problem. Once you accept venture money,
That's
private equity money,
Yeah.
your goal is not to just operate your business. When you accept venture capital money, your goal is to get more venture capital, because that's how they get their money back, is through an exit, meaning you sell the whole company, and they have preference on your stock, so they get paid first. Or
okay.
you get this first $1 million, you use this first $1 million, and now you go get 15 million. You go get $15 million. Let's say you get $1 million at a $10 million valuation, which means you sold 10% of your company for that $1 million check.
Okay.
Well, now you want to raise again and get maybe $5 or $10 million at a $100 million valuation. So that person that bought in for the $1 million at 10%, now their 10% is more valuable,
Right?
Because you raised at a higher valuation. That's how they get their capital back. Or you IPO, you take it public on this actual stock market, or you generate enough revenue to pay them their money back. But usually that doesn't work like that, because
that's what I was going to ask.
You're not generating enough profit to pay them back, and they're not in the business of getting paid dividends on your revenue or on your profit. They're in the business of exiting, IPOing, and raising additional capital. So I think the problem that a lot of Black founders run into, and the problem I might run into if I ever do it, which is why I'm probably not going to do it, is you need the next raise and the next raise, and
I was going to say that's like a Ponzi. Like, why there's not enough revenue to cover the investment.
Because a lot of times you take VC money for growth.
Yes.
And growth could be...
But growth just means raising more money? There's no way.
No. So growth could be, yes, attracting more money so you can continue to grow. And then you can continue to grow. And then now you get acquired by one of the big boys. Or you IPO.
Yeah.
And a lot of these companies, it's not about revenue. It's about users. So, like with Instagram, for example, they sold for $1 billion.
They did.
They had $0 in revenue. They wasn't concerned with monetizing. They was concerned with...
That's so true.
They was concerned with...
That's when Instagram was free. Not that it's not, but we pay for ads and everything else.
That's when Instagram was... Man, you have 500 followers. You get 300 likes. You know what I'm saying? Like on your post. Now you got 500,000 followers. And you get 1,000 likes.
Yes.
Or you got 1,500 followers and you get 4 likes.
Right.
Like people
Nobody
don't even
sees
see your
stuff.
no
Yeah,
more.
and it used to be almost like for friends, and you knew people, you were looking, and now it's like it's all of this advertising. Yeah. Every post that you see is selling you a shirt, selling you a dream, selling you a class.
So I don't know if the reason I probably wouldn't take VC money unless it's like a real number is because taking VC money means you got to go look and work and run your company to take the additional VC money and more VC money and either exit or go IPO. And I don't see my business as a business at this moment that would IPO. I think we would have to diversify our assets and diversify our offerings to be that type of company. A lot of companies are not VC type companies. Some companies are like lifestyle businesses, meaning you got one or two owners, they bootstrap it, make $5-10 million a year, and you're okay with that. Like that's you're gonna max out at that, and that's okay. Like never apologize for making millions of dollars.
Seriously.
Or hundreds of thousands of dollars.
Well, people
or taking care of yourself. You
people
don't need
like
a VC.
to use that money to like you said, to build out like your infrastructure that you wouldn't have. And it's just interesting that you take the position that you take because you're a big advocate for Black people having access to capital.
Yes, and like I said, it's just certain type of businesses. So, like for example, my brand is Black Millionaires. If I wanted to, and I am working on that though, right? It's not like I'm not working on diversifying my offerings. I am working on it. I'm saying I'm not there yet.
Okay.
So I also have a media brand that I'm working on getting trademarked called Sincere.
Mm-hmm.
Now, Sincere is going to be built as more of a VC backable company that's open to the public, that's open to, you know, and I'll take VC money and things like that for that. Right now, solely my biggest asset is Black Millionaires and the brand that I own. To me, that would be a good company to exit.
Okay.
So I could sell the company, or I could just use the company to generate enough revenue to get a return on my investments that I put in.
Mm-hmm.
It's not an IPO type of company.
Okay.
So that's why I wouldn't really take VC money.
So you're saying
now,
it is okay because it's not set up for.
I would literally be forced to sell my company.
Got it.
Because it's not set up right now for VC money.
Okay, understandable. But so in general, you feel like this is a good idea. Now, it's specific for healthcare and community infrastructure.
Yeah, their fund is specifically for that, but there's a lot of other funds. Some people funds are for retail.
Okay.
Some people funds are for AI. Mm-hmm. It really just depends on the type of VCs the type of VCs that are running it.
I could actually see you as a part of a fund.
Yeah, I would do that. That's definitely in my goals, as I acquire more capital.
Because I feel like you're a good assessment of talent.
Yeah. That's definitely something that I would consider down the road. But right now, I'm in the operation and building stage, and I'm just building my brand. So I personally wouldn't want to take on VC money right now, either buy the whole company or like I'll take on an angel investor. Nah, angel investor is like from a high net worth person.
Yes.
And they might be more willing to ride it out and stick out my vision for 5 to 7, 10 years and ride it out versus VC. VC, once they give you that check in the next 2 to 3 years, if you ain't raised no money, they gonna force an exit because they have to return capital to their shareholders. So
what do you think, as people who are entrepreneurs, people who have businesses who are listening to you right now, what do you think is a good place to get into investment or allow themselves to be invested in by a venture capital firm?
Yes, so for one, you have to think about what type of business you are trying to build. Are you really trying to build a VC backable company? Particularly in the Black community, a lot of us are not familiar with VC and private equity and things like that until we get a lot older. So a lot of the businesses we start are lifestyle businesses.
Okay.
Restaurants.
Okay.
Hair salons, barbershops, clothing brands. Like a lot of those brands don't get a lot of VC capital off the rip. Now, when you're talking about tech, when you're talking about AI, when you're talking about healthcare, stuff like that, that requires a lot more capital. Those are more VC backable companies because think about it. If you start out with a food truck, it's like, okay, you got a food truck. If you try to do something that's going to help cure cancer, that's a bigger idea. Now, if you succeed in that, that's what VCs are trying to swing for the fences. They're not trying to do little home runs. A little home run would be, I'm going to invest in your family restaurant. turn my 1 million into 2 million. They're not interested.
That's
in
not
turning,
a VC though.
That's not a VC is interested in turning 1 million into 100.
Gotcha.
Into 50, into 70, into 20.
Gotcha.
So a lot of what I would tell people is you got to expand your horizon. For one, don't only try to sell to black people. You got to sell to anyone and everybody. A lot of VC backable companies, they are niche down, but the goal is for them to become, available for all. They don't want to be a lifestyle business that one founder can run.
Mm-hmm.
A lot of our stuff is founder led. Everybody know who we are, and people buy because of us. And that's not a bad thing, but that's just because we don't have access to capital markets and capital like that. We are forced to create lifestyle businesses because that's all you can think about. If I knew about VC when I was 5, maybe when I was growing up, I would think of a business and think of raising capital and doing all that. But because that wasn't an option for me, I only seen people bootstrap.
Yes.
That was natural for me to bootstrap. So
got it.
I think people just have to get out of the lifestyle businesses and start thinking bigger, broader, not just for black people, not just for your local city, not just for your state, and start thinking
almost
about
like for
global,
the public. I was about to
think
say
about global and for the public, and start thinking about everybody.
And how this is going to be like a paradigm shift almost, because like you said, like you're curing cancer. That changes how we do life. Yes. when you're doing the curing something like that. If you're doing something for like maybe airplanes or tech or something like you're changing how people live.